Okay, let's unpack this. Today, we're doing a deep dive for you into a source that's, well, maybe a little niche, but incredibly valuable. It's the examiner's report for the ACCA Advanced Financial Management. That's AFM December 2024 exam.
Yeah, and this isn't just, dry stats or pass rates. Think of this report as getting feedback, like straight from the examiners. It tells us exactly how candidates coped, what they did really well on, and maybe more importantly, where things got a bit tricky. And these are some pretty complex financial problems we're talking about.
Right. It's like getting intelligence from the front lines of advanced finance. So our mission here with this deep dive is to really slice into this report, pull out the most important insights, and figure out what lessons we can learn from how everyone did. And it's not just for someone sitting this exact exam, is it? It's for anyone curious about the real challenges in advanced finance today.
Exactly. What skills are really needed beyond just, crunching the numbers? What can we learn from how others tackled these problems? And the report actually, it gives us some really clear signals about that balance, technical skill versus application.
Okay, so maybe lay the land for us first. What's the exam structure like? Because that usually hints at what they're really testing.
Absolutely. So it's a 2-section paper. Section A is one big compulsory 50-mark question, heavy hitter. Then section B has 2 compulsory 25-mark questions. But the key thing, and this is woven right through, are the professional skills marks. We're talking communication, analysis and evaluation, skepticism, and commercial acumen.
So they're integrated, not like a separate test.
Precisely. You earn these marks while you're answering the technical parts. It's not bolted on at the end.
That's interesting. So it means they're not just looking for the right number, but how you got there, how you explained it.
Spot on. It really moves beyond just calculation.
Yeah.
Now, the report's view on overall performance, well, it was acceptable. That's the word they used.
Acceptable. Oh, not glowing, but not disastrous either.
Kind of, yeah. Solid, maybe. But they did flag that some of the calculations needed were, and I quote, technically demanding.
Technically demanding.
Right.
Examiner code for pretty darn hard.
It certainly can be. And something really significant they noted. Candidates who actually spent time reading and digesting the scenario properly before writing, they did noticeably better on the discussion parts.
That makes perfect sense, doesn't it? You need the context. All the tools in the world won't help if you don't understand the actual situation you're applying them to.
Exactly.
So how did those professional skills pan out overall?
Well, it kind of mirrored the technical side, actually. Communication and analysis and evaluation. They were relatively well scored. People seemed okay there. Commercial acumen is showing improvement, which, that's good to see. But, and this is a big but, a theme throughout the report, skepticism. That remains a major, major hurdle for most.
Skepticism again. Okay.
Yeah, the examiners specifically called it out as needing significant work. Oh, and time management. That also popped up as an issue for some.
Right, juggling the reading, the calcs, the writing, under pressure.
It's a lot to balance.
Okay, let's zoom in on those professional skills then. You said communication was okay?
Generally, yes. Stronger area. Candidates picked up marks for using clear, logical report formats when asked, headings, subheadings, solid conclusions. Sounds basic, but presenting information clearly is vital. The report did say some lost easy marks just by, ignoring the required format.
Simple things, but they matter. And analysis and evaluation, that sounds like it's tied pretty closely to the numbers.
It absolutely is. This is where your technical skill meets clear presentation. If you did the calculations right and, importantly, showed your workings clearly, logically, you generally scored well here. It's about letting the marker follow your train of thought.
Right. Okay, now, the big one you mentioned, skepticism. Why is that such a persistent struggle, do you think, based on the report?
Well, the examiners were pretty direct. Opportunities to, say, question assumptions in the scenario, or challenge the information given, or even just look for potential bias. They were just missed consistently. Candidates tended to just take the data, the statements, at face value without that critical lens. This skill, thinking critically about the information itself, was flagged multiple times. It's not just about getting the answer, it's asking, hang on, is this number solid? Is that assumption fair?
That's a huge takeaway, isn't it? It's the difference between just crunching numbers and actually advising someone properly.
Totally.
What about commercial acumen? You said improving.
Yeah, showing definite improvement. Lots of candidates did a good job linking answers back to the specific company, the scenario, or, broader business realities, understanding the context. But there were still missed chances. The report gives a really specific example from question 2. Yeah, The scenario mentioned a 25% market share threshold for a competition authority investigation. But very few candidates seem to realize that 25% is often just a guideline, right? A trigger for looking closer, not some automatic hard stop.
Okay. So not questioning that number.
Exactly. Missing that nuance shows a lack of, well, maybe commercial awareness, or again, that lack of skepticism towards the data provided. It's about understanding how things work in the real world.
That's a great specific point. It shows they're looking for that practical understanding, not just textbook definitions. Okay, let's get into the weeds now. The questions themselves, starting with the big one. Q1, North Nico, 50 marks.
Right, this covered a few bases. First part, relocating a Treasury function. Examiners found lots of candidates just listed like generic benefits of centralizing Treasury, stuff straight from the book.
Okay.
But they didn't really apply it properly to North Nico's situation, like the specific challenges of setting up a brand new function, or the location choice factors for them, control issues in that context.
So not just why centralize, but how and what does it mean for this specific company? Application was missing.
Precisely. Scenario application was weak there for many.
How about intergroup settlement? Any better there?
Yes. This was actually a highlight. Most candidates did very well, is the phrase used, often getting full marks or very close. A few might have missed the very final calculation step, but overall, that seemed to be a concept they grasped and applied well.
Good to hear. Okay, futures hedge.
Also generally pretty well done, but common errors were quite fundamental things sometimes, like not clearly stating if they were buying or selling futures.
Oh, basic stuff.
Yeah, or getting the number of contracts wrong or messing up the basis calculation. Simple slips, but costly. And they also expected clear instructions to the board on how to execute the hedge. So linking the technical stuff to communication again.
Right. Practical advice. Okay, deep breath now. The interest rate collar. The report hinted this was not good.
Significant struggle is the exact phrase. It explicitly says very few successfully completing it. That's pretty stark feedback.
Wow. Very few.
Yeah. Many just couldn't get past the first hurdles, figuring out the right options combo, the number of contracts needed, calculating the net premium. This was clearly a major technical block for almost everyone.
That's a really strong signal about the difficulty or maybe understanding of that specific technique. What about discussing why choose certain hedges?
Candidates did okay here, talking about futures versus collars, pros and cons. But a lot missed the requirement to compare these with other possible methods.
The wider picture.
Exactly. And they often overlooked practical things too, like margin payments for futures or basis risk, real-world factors that matter. Showed a need for broader, more comparative knowledge.
And the political and operational risks part.
Answers were generally acceptable. People applied general knowledge and some scenario points. But, and here we go again, this section offered chances to show commercial acumen and skepticism.
How?
Well, you could question the likelihood of a stated risk, perhaps, or discuss how the company's specific operations might lessen that risk. Those kinds of deeper insights, linking risk to the business context, were often missed. Opportunities for skepticism and commercial sense, basically.
Got it. Okay, moving on to section B, the 25 markers. Question 2, Texaco looked like it was about acquisitions.
Yes, M&A focus, Part A, asked for pre-acquisition value and the extra value created. Most did okay valuing the individual companies initially. Where errors crept in was calculating the combined earnings, maybe missing the synergistic gains, or misinterpreting how they'd actually apply, or just not netting off the initial values correctly to get that final additional value figure. Small steps missed sometimes.
And the bit about impact on shareholder wealth and EPS.
That caused problems for quite a few. Many seemed to get stuck after the initial valuation. A really fundamental error for some was messing up the calculation of how many shares would be issued in the share-for-share exchange.
Which is crucial for everything else.
Absolutely. It's the starting point for the next steps. And the report also noted many just completely skipped the earnings per share calculation.
Ouch. Just omitted it. That's quite telling. How about shareholder approval?
Answers were generally reasonable. People often linked it back to the financial impact. But a common mistake was only talking about approval from one set of shareholders, Yek-on-Co's, usually.
When it affects both sides.
Exactly. The deal obviously involved both companies, so you needed to consider the shareholders of Texaco too. Think about all the relevant parties.
Right. Makes sense. And Part B, the competition authority factors.
Now, this was a good test of applying information given in an exhibit. Lots of candidates gave good, detailed answers by taking the factors from Exhibit 3 and really applying them to the specifics of the Texaco deal.
Okay, so using the provided info well.
Yes, but that contrasted sharply with what they called a significant minority who just basically copied or rephrased the exhibit. No real analysis or application to the scenario.
Just summarizing, not analyzing.
Precisely. And there were technical errors too, like people discussing company valuations or takeover rules, which aren't really the competition authority's main focus. They're looking at market impact, competition issues.
And this is where that 25% market share point came up again, you said.
Spot on. The report uses this section to highlight again that few candidates questioned that 25% figure. Was it a hard rule? A guideline. Again, a missed chance for commercial acumen understanding how these authorities work and skepticism questioning the data.
Gotcha. Okay, last one. Question 3, Zulico. Another 25 marker looked heavy on equity valuation.
Definitely. And performance here was very mixed. The report says few candidates felt confident, and you could see why in the results.
Confidence lacking. Okay.
Calculation errors were all over the place. Problems with discounting and dividend models, mixing up total company values and per share figures. Big struggles calculating free cash flow, especially if starting from profit after tax, difficulties estimating growth rates. Just lots of technical tripwires.
It sounds like a minefield of potential calculation errors.
It kind of was. And a specific detail many missed. There was info about a 30% equity value increase expected after the IPO. Lots forgot to adjust their final valuation for that. It really showed a lack of confidence and technical grip for many.
So complex calculations, again, proving a major challenge.
Yeah.
After the numbers, they had to comment on the results, compare free cash flow versus dividend approaches.
Yes, and this is where you could really see the difference between stronger and weaker candidates. The stronger ones gave meaningful comments. They talked about limitations, assumptions, and crucially, they explicitly showed skepticism about the numbers or the models themselves.
Okay.
Weaker candidates. Thin comments, maybe very vague skepticism like, this might not be right, or they just picked the highest value without explaining why. It was a clear chance to use that skepticism skill, and many didn't take it effectively.
Interesting contrast there. And the final part of Q3, comparing a reverse takeover versus an IPO.
Actually, this was more positive. Most made a creditable attempt, is how the report put it. Showed they generally understood the concepts of IPOs and RTOs and could talk about the pros and cons.
So the foundational knowledge of those corporate finance options was okay.
Seems so, yeah. Understanding those general concepts was a relative strength.
Okay, so let's pull this all together, bringing it back to you, the listener. What does this deep dive into one examiner's report really tell us?
Well, it gives a really practical, almost gritty view of where the challenges lie in advanced finance. You see successes, like that intergroup settlement bit, certain technical areas are clearly being mastered by many. But the consistent struggles, wow, that interest rate collar calculation, applying knowledge specifically to the scenario, not just generally, handling complex valuation bits, and that recurring theme, skepticism. These really highlight where advanced finance pushes you. It's clearly not just about knowing formulas. It's about reading carefully, thinking critically, and applying everything in a unique, often messy context.
Yeah, this report isn't just feedback for those candidates, is it? It's almost like a roadmap showing where the common gaps are between knowing something and being able to apply it under pressure with judgment.
Exactly. It shows strength, like presenting info clearly, understanding core concepts like IPOs versus RTOs, but it points squarely at those persistent weaknesses, tackling the really demanding calculations, and critically, that ability to challenge assumptions, and the need to analyze and apply information to the specific situation, not just regurgitate facts. That comes through loud and clear.
Looking at feedback like this, it feels incredibly valuable, whether you're studying now, already working in finance, or just, curious about it. It cuts through the theory. It shows you the actual stumbling blocks people hit in practice, understanding those nuances, identifying where maybe you need to sharpen your own skills.
It really is a guide for improvement, seeing it laid out like this.
So let's leave you with a final thought to mull over based on all this. This report strongly suggests that while, yes, technical calculation is absolutely vital in advanced finance, the real difference maker, especially when things get complex and messy, often seems to be applying that critical thinking, having real commercial awareness, and maybe most importantly, having the willingness and the skill to actually question assumptions and data, not just accept them. So the question for you is, how can you actively cultivate that essential skepticism in your own financial analysis and your own learning? How do you move beyond just finding an answer to critically evaluating the problem itself?